Hi, I'm Rosie from Lita Rippe Real Estate, and I'm here to talk about inflation, stagflation, and how it's impacting the real estate market. We'll be covering basic concepts, what you will need to look for in the current market, and how you can use the data in making a real estate decision suitable to your needs. Let's start off with a quick overview of what is inflation. Inflation is defined as the rate at which prices for goods and services rise. This can have a direct impact on the real estate market, as property values are directly tied to inflation. When inflation is high, property values will typically increase as well. This has been the case for the past 2 years over a multitude of factors, from COVID, the government changing, supply chain issues, to changes in the socioeconomic conditions globally. Next, let's talk about stagflation. Stagflation is a situation in which the economy is stagnant or in recession while prices continue to rise. In other words, it is a period of time when the economy is not creating jobs, wages are not increasing, and the cost of goods and services is going up. This can be a difficult time for consumers and businesses alike. Lastly, let's talk about the Home Demand Index, or HDI. The HDI and accompanying economic research measures and tracks housing demand, home prices, and home buying activities. By analyzing property data gathered from real estate agents, home sellers, and homebuyers involved in the viewing, showing, buying, and selling of homes. The HDI utilizes a score that incorporates data on pre-sale activities, such as views of homes online and in-person showings of homes, across different geographies and types of homes in a local residential real estate market. Based on index scores, home buying demand activity is categorized along a 5-level rating scale from limited demand, slow demand, steady demand, moderate demand, to high demand. Most importantly, the HDI identifies demand for homes at the metropolitan and zip code level with the ability to make comparisons across geographic areas and market segments. By utilizing this data, the Lita Rippe real estate team tracks the local market trends while also empowering clients with better decision-making. Let's take a deeper dive into what the DC residential real estate market is looking like. Demand for all types of homes in the Washington metro area fell over the month. The index for higher-priced single-family homes and for higher-priced condos fell 13% over the month, more than any other segments of the market. Despite the declines, demand for homes in July was strongest in each of these segments, with the index remaining in the high range. Buyer interest was limited for lower-priced single-family homes and moderate for other segments of the market. The month's supply of inventory rose for each market segment in July, marking the third consecutive month where the month's supply increased for all types of Washington metro area homes. Inventory levels ranged from a 1.6-month supply for mid-priced single-family homes to 3.3 months for higher-priced condos. Why is this data important? The Lita Rippe real estate team constantly monitors this data to provide our clients with the right guidance to achieve their real estate goals. Now, let's look at this data, segmented by property type in DC. Demand for lower-priced single-family homes fell in July from an already low level, reflecting limited buyer interest. The index was more than 1/3 lower than 1 year earlier, reflecting the ongoing weakness in demand. There was a 2-month supply, up marginally from June. Home Demand Index for mid-priced single-family homes, at 118, was down from the previous month, but remained in the moderate range of buyer demand. Although the month's supply rose to 1.6 from 1.2 months in June, it was still the lowest of any segment of the Washington metro market. Demand for higher-priced single-family homes cooled in July, with the index falling 13% to 228. While down over the month, the index remained in the high-demand category. Unlike other types of Washington metro area homes, demand was higher than 1 year earlier even after the decline in July. There was a 1.9-month supply, up from 1.3 months in June. Buyer interest in lower-priced condos eased in July but continued to reflect a moderate pace of demand. The index was 17% lower than 1 year earlier, however. The month's supply rose to 2.1 from 1.8 months in June. The demand for higher-priced condos remained in the high range of buyer interest. Although still reflecting strong demand, the index was 13% lower over the month. The month's supply, at 3.3, was up from 2.7 months in June. Home demand index for the townhouse segment decreased 8% in July to 112. Despite the decrease, demand remained in the moderate range. There was a 1.7-month supply of homes on the market, up from 1.3 months in June. Even with the increase, the month's supply was lower than any other segment of the market except mid-priced single-family homes. Now that we've covered the overview of the market, think about the following when it comes to your real estate decisions. Are you looking to make a quick profit, or are you more interested in long-term wealth building? Understanding the data we went through in this video will help you decide which type of property to invest in. There are many other factors to consider as well, but these are some of the most important. If you're interested in learning more about how to build your real estate portfolio, contact Lita Rippe Real Estate. We understand the market and will find the right property for your needs, whether it's an investment property, a vacation home, a trust, or a forever home. Similarly, if you're looking to sell or lease your residential or commercial property, we've got you covered. Whatever your needs may be, we'll help you make the right decision and make sure you receive the highest quality service. Call us now to schedule a consultation. Thanks for watching. Ciao for now.